Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. Where we take a look at these markets, we do it from a neoclassical perspective each time, asking ourselves just one question, and that is, what happened today? And does it tell us anything about the coming days? I do this show 4 times a week, every Monday through Thursday, broadcast at or before 10 o'clock Eastern Time, archived on YouTube under the channel L.A. Little. It's also a weekly show. It comes on Sunday evenings if you want to catch that one. We try to do a little broader perspective. And for all of these, if you just reach up in the right-hand corner, subscribe. Anytime I push content, you get notification. And it makes it easy to keep up with these markets, what's going on. Supply and demand on the charts, folks. That's what we're looking at. Let's take a look at the numbers here. Let's pop in Yahoo's quotes. We got gold down slightly. The real story was the Russell again. Russell couldn't move to the upside. He ends up losing another 0.5%. And this is tied, I think, and I haven't done the research to prove it, but I believe this is tied to the fact that there's a lot of small stocks in the group that are either oil related or basic materials related. And I believe that's what's keeping this group down so far. Going overseas, you had some declines elsewhere. Taiwan was up again. Japan was up last night. The Shanghai also posted gains. Europe actually was mixed. Germany barely squeaked out a small gain, and the CAC was down. Not a lot there. If we look at the indexes, S&P 500 comes off the top, no volume, just a little bit of a pullback. We got all the big news starting tomorrow with Apple, and then the Fed on Wednesday. We look at the NASDAQ. NASDAQ doesn't even want to pull back, right? It ekes out a small gain, stays up, hanging at the highs. If you look at the NDX, same thing, hanging at the highs, no gain, no losses today, small gain. And then, of course, the Russell we talked about. The Russell comes pushing back down, just cannot get over the swing point high, keeps trying. You know, folks, I'm sure there's some stops up there. If it does it, it's going to spike right to this high. But if it doesn't, it's going to come on back down here and test as low again. So, this to me is one of the key tells this week is what does it do. But I think it's all kind of irrelevant because I think they're all going to move together when they move, and that's going to be off Apple's earnings and the Fed on Wednesday. As far as what did move today, it wasn't the indexes, and it wasn't the sectors, and it wasn't the overseas markets. What moved today, what had significance today, was the oil markets. Let's take a look at that, baby. You got all these swing point lows lined up together. It starts breaking them today. Doesn't have any volume, but it's got a break. And when you get that sort of a break, if it holds, it can carry. Now, the good thing for the oil bulls is that this is only on one time frame, right? They're all lined up on one time frame. So you can get some carry through 2 to 3 bars on the longest time frame that breaks. But it's only on the daily. It doesn't have any swing points on the weekly, not until you get back down here. So for now, at least, you can get some pullback, but it's not as if it's going to crush anybody, in terms of just big barreling down. I mean, it still could, but it doesn't read that way. You can't assume it's going to happen. Probabilities don't favor that. Probabilities do favor 2 to 3 bars on the daily time frame. How far that extends doesn't tell you that. Just tells you that you can expect this is going to try to push lower. Sideways to lower, at worst sideways, probably lower. That's the oil market. And then going back to that weekly chart, this market has been in a downtrend. People keep trying to call the bottom on it. They're trying to call it here, and they're trying to call it in the stocks themselves, and they've been failing on both cases. Now, if you time it well, and I'd done a piece a while back about the timing here that you could get this bump up, but you got to time it well, right? And the better test is the test that comes down and shows divergence here, right? In other words, oil would make a new low, and you wouldn't see that divergence in the oil stocks. And then that would give you a nice setup for a bigger move over in the oil stocks or even here in the oil market. But we're not there yet. We'll see if it sets up that way. And there is a video on the front page if you, let me see if I can find it here. If you can go back and find it. It was probably a little while back. I'm not sure if it's going to show. You could search for it. You could pop in here and do a search and find it. Just look for Oil and divergence, that ought to get you to it. Okay, as far as what's going to happen next, I mean, there's not much to talk about. Tomorrow's going to be the same deal. It's not going to do anything. It's just going to sit there. And it's going to sit there on low volume. And it's going to wait on Apple earnings. And then you're going to have all the fireworks after the bell. And it's either going to be up or down, right? I mean, more than likely, you're going to see a larger move. Today, as a matter of fact, we ought to just look at Apple right quick. Because Apple gave up everything it gained on Friday when everybody surged, and comes back down with even heavier volume today into its earnings. So it's not like, they're expecting the world from Apple. Apple gives up a bullish retest regen on the immediate retest. So to me, this is not a rubber stamp earnings for Apple coming into earnings. So it looks to me like Apple potentially could have some troubles. Look at it on weekly. If Apple gets back into this big bar, Apple would have to, when I'm looking at this, Apple would have to trade under about 110 to really get this thing rolling again to the downside. So that's where the risk starts. Traded at about 115 today. So you'd have to lose about $5-6 to really get this thing rolling to the downside. Probably want to see it trade under and close under 110. So that's probably the number. Earnings expectations are high, and if Apple can't deliver above and beyond that, and they never advertise their guidance that bullishly. So if they don't advertise their guidance bullishly, which is probably going to be the case, they're going to have to blow away their numbers. And if they don't do that, the bar may be set just a little too high, with a huge run up in tech already, and Apple providing the bulk of the earnings for the tech sector, that may not do the job. So we'll see how it plays out. That's the test. And then, of course, the Fed on Wednesday. If you think about the Fed, what are they going to say? We want to raise rates, but we can't because the rest of the world is sucking air. I don't know what they're going to say, because they keep telling us that maybe this time, but they can't do anything, or they won't do anything. If they surprise and they raise rates, this market's going to have a shock, heart attack. I don't think it's going to last. It's just going to be a little blip that scares the heck out of everybody. If you ask me where the risk is to the downside, and the risk is to the downside on Apple as well. We'll see if either of them or both of them, just as we had the trifecta to the upside last week after Draghi did his thing, maybe you're going to see it the opposite way this week. That's it for tonight. We'll see you tomorrow. We'll set up the Apple earnings, and actually we'll have the numbers by the time I broadcast, and we'll see the reaction. I'll see you then. Have a great one. Take care.